What if you could master the world of credit cards in just the next few minutes? Envision a world where puzzling terms and complexities are no more. Imagine gaining the confidence to navigate through this financial maze with ease. Our primary goal today is to equip you with a solid understanding of the two essential types of credit cards, secured and unsecured. We aim to uncover their unique features, advantages, and how they can impact your financial path. The secured credit card, often deemed as the first step in credit building, requires a refundable security deposit. Its credit limit is usually equal to the deposit you've made. It's an excellent option for those with no credit history or looking to rebuild their credit. On the flip side, unsecured credit cards do not need any security deposit and offer a higher credit limit. They are usually the next step once you've built a sound credit foundation. Today, we'll leave no stone unturned as we help you unravel the mysteries surrounding these financial tools. We'll be talking about their respective pros and cons, how to choose between them based on your financial needs, and tips to use them effectively. While we're on this, we'd like to encourage you to click that like button and subscribe to our channel. It's a simple step on your end, but it significantly helps us continue creating informative content like this for your benefit. Remember, every click counts. So buckle up and prepare yourself as we venture into the intriguing of secured and unsecured credit cards. Trust us, it's a journey worth embarking on. Ever wondered why some credit cards require a deposit while others don't? This question often sparks curiosity in numerous individuals unfamiliar with the intricacies of financial tools. Well, we're going to unravel this mystery, illuminating the often cloudy domain of credit cards. First, it's important to understand that credit cards are financial instruments provided by banking and other financial institutions. These instruments permit you to borrow funds for either purchases or cash advances up to a specified limit. The expectation is that you will repay the borrowed funds, usually with an added interest, by a stipulated due date. To comprehend this better, let's categorize credit cards into two broad types, secured and unsecured. Picture these two categories as distinct siblings, each possessing unique characteristics. The secured credit card can be seen as the cautious older sibling, careful and always desiring a safety net. Due to this cautious nature, it demands a security deposit as collateral before allowing any borrowing. This deposit usually matches the credit limit assigned to you. Contrarily, the unsecured credit card can be likened to a daring younger sibling, more willing to take risks. This type instills more trust in you and doesn't necessitate a security deposit. It operates more like a friend who lends you money, relying solely on your verbal commitment past financial behaviors to ensure you'll pay it back. The prime difference between these two types rests in the requirement of a security deposit. The secured cards, due to their nature, are tailored for people who are either new to credit or are striving to reconstruct their credit history. They present a safer option for lenders because if you fail to meet your payment obligations, they have your deposit to lean on. Meanwhile, unsecured cards are typically for those who have managed to maintain a good credit history. They offer higher credit limits and an array of perks, but also pose a greater risk to the lender. If you're unable to repay the borrowed amount, the lender has no safety net to recover their funds. Therefore, the requirement of a deposit for a credit card is heavily dependent on its classification and the level of risk the lender is prepared to undertake. It represents a careful equilibrium between trust and security. The decision to require a deposit or not ultimately hinges on these factors. Now that you understand the basics, let's delve deeper into each type. Secured credit cards, a safer option, but are they right for you? Let's delve deeper into the subject. Secured credit cards are a unique kind of credit card that necessitates a cash deposit as collateral. This deposit acts as a fail-safe for the issuing financial institution, thereby considerably reducing their risk level. They are perfectly suited for those who are navigating their way through the vast and often confusing world of credit for the first time, or are on a journey to rebuild their credit history from scratch. Secured credit cards can be an exceptional tool in such situations. They provide an opportunity to re-establish a credit history in a controlled, manageable, and sensible way. So, you may be wondering, how does it operate? Let's consider a hypothetical scenario. You deposit $200 into a secured credit card account. That amount, $200, then becomes the upper limit of your credit. If you spend prudently, make payments punctually, your credit score will gradually start to rise. This is a practical, hands-on approach to learning about credit management, a necessary skill in today's financial landscape. Now let's examine the advantages of secured credit cards. First and foremost, secured credit cards have a comparatively easier approval process. Even if your credit history is less than perfect or non-existent, a secured card could be a viable option. Secondly, they can play a significant role in building or repairing your credit score. Regular and responsible use of a secured card can help you demonstrate to lenders that you're a trustworthy borrower. However, like everything else, secured credit cards also have their disadvantages. The main one is that you need to have the cash ready for the deposit upfront. This can be a significant barrier for some individuals. Moreover, secured cards frequently come with higher fees and interest rates than their unsecured counterparts, making them a hefty investment. So who are secured credit cards best suited for? They're an excellent choice for those who are just beginning their credit journey, those recuperating from bankruptcy, or aiming to improve their credit score. Remember, if you find this information beneficial, please do give us a like and hit that subscribe button. We greatly appreciate your support. Secured credit cards might be a safer option, but they aren't the only option. There are other types of credit cards available in the market, each with their unique set of advantages and disadvantages. Stay tuned to learn more about these alternatives. Unsecured credit cards, a riskier choice, or is it really? As we move, we will explore the intricacies of unsecured credit cards. Contrary to the secured variety, unsecured credit cards don't necessitate a safety deposit. This characteristic makes them more appealing, particularly to individuals who find it challenging to set aside a substantial amount of money, akin to having a mini loan facility available in your wallet, accessible whenever required. Now, let's focus on the benefits. Primarily, unsecured credit cards provide an increased level of flexibility. Your spending limit isn't directly linked to a deposit, which can be a significant advantage for many. Additionally, these cards frequently come with attractive reward schemes. Perks like cashback, travel miles, or points redeemable for products are typically offered. It's as if you are receiving an added bonus just for utilizing your card. However, every coin has two sides. The primary drawback of unsecured credit cards is that they tend to have steeper interest rates. This is a risk-mitigating strategy employed by the card issuer. If managed well, these interest charges can accumulate rapidly, transforming your small loan into a massive debt. A secondary disadvantage could be the presence of annual charges. While these charges are often not exorbitantly high, they are an extra expense to factor in. The lure to overspend can amplify due to higher credit limits and the lack of a deposit serving as a safety buffer. Thus, the crucial question for whom are unsecured credit cards most appropriate are an excellent choice for people possessing a commendable credit rating and a proven track record of responsible credit usage. They are also advantageous for those who can capitalize on the reward schemes, thus balancing out possible expenditures. Unsecured credit cards are indeed a beneficial financial instrument, albeit they aren't suitable for all. They mandate a judicious equilibrium between expenditure and repayment, and a comprehensive comprehension of the terms and conditions. It's also vital to remember, before making any financial decision, it's essential to conduct thorough research and assess your personal financial state. By now, should have a more transparent understanding of both varieties of credit cards, but which one should you choose? Secured or unsecured, which one is your knight in shining armor? Well, let's dive into this. Secured credit cards, think of them as your cautious partner. They demand a security deposit, usually equivalent to your credit limit. They're a fantastic choice when you seek to build or repair your credit score. However, they can be restrictive due to their prerequisite of an upfront deposit. Moving to unsecured credit cards, they're like your daring companion. They don't necessitate a security deposit and typically come with a higher credit limit and rewarding programs. But acquiring them might be a challenge, particularly if you're new in the credit world or have a less than stellar credit score. So, how to decide the best one for you? It fundamentally depends on your financial situation, your credit score, and your spending habits. Analyze these aspects and make a knowledgeable decision. You might be someone who is starting anew and needs to build credit, or an experienced cardholder desiring better perks and rewards. Remember, the right choice always depends on your personal financial situation. So, secured or unsecured, which credit card type fits you better? To answer this question, you must know that secured cards often require a deposit that is equivalent to your credit limit. This is a safety net for the lender should you default on your payments. On the other hand, unsecured cards do not a deposit, making them less risky for the borrower, but potentially more risky for the lender. They generally offer more rewards and perks. Either option can impact your credit score, meaning choosing the right credit card is crucial. It's important to align the card type with your financial goals and habits. Remember, knowledge empowers choice. Always keep yourself informed and updated. Don't forget to hit like and subscribe for more enlightening content on personal finance. As we conclude, think about this. How can understanding the difference between secured and unsecured credit cards impact your financial future?